Hey, I'm Jeremy Drobeck with Treadstone Mortgage, and I am not a huge fan of the boring market update videos that people put out there, but I wanted to do an end of the year kind of recap and just a quick what I see happening in 2025. So, Happy New Year, everybody, and I'm going to keep this short and sweet, but I want to show you just some statistics. Now, I'm based in the Kalamazoo, Michigan market, and so I'm going to show you Kalamazoo County statistics here real quick. So overall, 2023 to 2024, the number of homes sold in Kalamazoo County was down 3%. The average price was up 3%. So even though we had fewer homes sell, the home we still saw home appreciation in the area, and days on the market was up significantly. If you look at a percentage standpoint, days on the market was up from 24 days to 32 days, which is like 33%. So homes are sitting on the market quite a bit longer, 30% longer than they were in 2023. So kind of interesting number. They're still selling fast, like 32 days historically is a very good number. I remember the days when it was 4 months on average for a house to sell. So they're still selling fast, but quite a bit longer than they were in 2023. So now, what does this mean? Like, what does all this mean in terms of what's going to happen? And I talk to some people; they're waiting for the market to crash, or they're waiting for rates to come down, or they're waiting for whatever reason. And looking forward to 2025, like and even these last 2 years since rates went up after COVID, like affordability is the challenge for people. And I know people are hoping that rates are going to come down, but we're not doing bad rate wise. I mean, depending on the loan program and down payment and credit and all that stuff, and the rates are sitting, mid sixes to low sevens, somewhere in there, again, depending on the person's scenario, which is really normal. I actually pulled a statistic. I'll show you the chart, but I pulled a statistic from bankrate.com, and the average interest rate, the average mortgage interest rate since 1972, they've been tracking this, the average rate is 7.2%. So we're actually in many cases under that average rate. So from a rate perspective, I think hoping for rates or waiting for rates to come down is wishful thinking. I also think waiting for prices to come down is wishful thinking. I mean, we had fewer homes sell, but prices still went up. So what's going to change in 2025? What's going to break loose? I don't think there's going to be a whole lot of change. I'll tell you, Biden didn't fix it and Trump's not going to fix it. It's not a political thing. It's an overall affordability. I think the consumer's getting pinched in every directions, right? Like food's more, gas is more, it's just more to live, and all that combined is where the affordability crunch is, and people need to get used to, I guess, the new norm and get comfortable with that within their budgets. And we'll see the market probably pick up a little bit more. The other thing is we still have all these buyers that we refinanced at really like abnormally low rates that we'll probably never see again. They're still sitting there with low mortgage payments, and it's really hard for them to sell and move up in house, even though a lot of them want to. It's just not worth it when they look at it from a financial perspective. So are we going to see a whole bunch more homes hit the market for sale? Probably not. Like those people won't move until life changes to the point where like they have to move. Like they got a new job and they're moving out of town for the new job, or they've had 3 kids, they've got 1 bedroom or 2 bedrooms, like the house is way too small and they have to move, or like things like death and divorce and stuff like that. So like major life events is what gets people to sell more so right now than the desire for a bigger house, because they're sitting on these low payments. So we're at this point in the market where the buyers and sellers aren't necessarily on the same page, or the wannabe buyers aren't willing to become sellers, which will help with our inventory and homes to choose from and stuff. So I think in 2025 we're in for more of the same. I don't think there's going to be a lot of change. I think that rates are normal right now. They're not high like people say they're high. They're really normal. If you look at the averages over time, yes, they're high from the COVID years, but they're normal in terms of the last 50 years. So what it comes down to is if you're in a position where you are renting, you should buy because you're missing out on that appreciation, right? Like the average, that if the average house went up 3%, well, if you owned a $200,000 house, that means you would have made $6,000 in appreciation. That's a heck of a lot better than renting, right? So if you're a renter, you should look at buying. If you have something in life that changes where you need a bigger house or you need to move for whatever reason, you should look at buying, right? But it's really that individual, like, are you in a spot where you're done rent and you can financially afford a house and that's the time to buy. So there's still lots of program options out there for low down payment, like all that kind of stuff is still available. There's tons of ways to get to the finish line when it comes to buying. It really is it within your personal budget? So now, on a totally side note, for my investor friends watching this, multifamily housing was like totally different. I was shocked when I saw these statistics. So, in the multifamily, there was homes sold were up 9%, prices were up 5%, and days on market was down 39% for multifamily housing. So when I thought about those statistics, what that means to me is that it's a different perspective, right? So when you're buying in a multifamily house, it's all about the math. It's not about do I have to move? It's not about do I like is the house pretty? It's about the numbers. And for a couple years after COVID, when rates went up, when investors that were looking to buy those multifamily homes would analyze the numbers, they couldn't get them to make sense. They wouldn't cash flow and there just wasn't enough rent being generated on the property for what the payment was going to be for that investor. And I think what we're seeing correct itself there is landlords over the last few years have been raising rent on people. And I think that change, the reason we saw a bunch of positive statistics in the multifamily sector is that those rents have caught up a bit. And I hear it on the phone when I'm talking to buyers that are trying to stop renting, right? The landlords keep raising their rent. And so now investors are analyzing these numbers on the multifamily homes and they're getting them to cash flow on paper because rents have gone up over the last couple of years. So super positive for people out there looking to buy multifamily homes. Not so good for the renters. For the renters, hey, this is why you should buy because then your landlord won't be raising your rent. Like if you buy a house, you're locked in, right? We'll do a fixed rate loan, like the price is locked in. You're not going to see that payment skyrocket on you over the years like it has over the last couple of years for the renter. So overall, 2025, again, I think it's going to be more of what we saw in 23 and 24. I think we're going to see a whole lot of change. If you're thinking about buying a house, call me. We'll dive into your individual situation and hash through the details. I'm Jeremy Drolbeck, Treadstone Mortgage.